Hello everyone and welcome to my morning report analysis videos on Friday the 7th of December with me, Rich Pro Market Analyst at Hantec Markets. It's Nonfarm Payrolls Friday, and what we have got is a market that is twofold really. We've got Forex markets that are basically steady really in front of payrolls, but equity markets are all over the place. Look at this volatility that we've seen through the VIX yesterday. What an enormous sell-off we saw on the S&P 500 and Wall Street markets generally, only to bounce into the close after a report that suggested that the Fed may be doing one hike in December and perhaps even then go on pause. It's possible, and certainly the markets reacted strongly to that. Whether that's a positive going further out or not, I'm not entirely convinced at the moment, but certainly the reaction on markets was positive yesterday to this prospect of the Fed going on pause after this next rate hike that's surely going to be seen in December. So subsequently we've seen equity markets all over the shop. Yesterday sharp down days across Europe, but that's been rebounded today by 1.5% on FTSE, percent on the DAX. Look at these treasury yields continue to remain under pressure. That 10-year back below 2.9% now, the 2-year also falling sharply, and the yield curve continues to remain under pressure of going possibly flat and inverted. So we've got the 2-10 spread at 13 basis points now, and it really is still a threat. Now in terms of the dollar, basically it's been choppy sideways in recent days, no real direction in the last week or so, as that uptrend channel remains intact. But it's interesting the implications that we could have from payrolls report this afternoon and how we're going to read into that. So we've got the payrolls report, which is the main factor today, and let me show you the expectations, which is 200 bang on, 200,000 bang on, unemployment 3.7, average hourly earnings of 3.1, pretty much in line with last month on the average hourly earnings, in line on the unemployment, and just a fairly bog standard normal 200,000 on the headline. But how the markets reads any surprises around that will be the intriguing factor, and something that I think is quite difficult to read really. I suppose what you'd look at is any positive report would be seen as dollar positive, but actually what would that mean for risk appetite? Would it actually be negative for risk appetite, considering, I mean, looking at the reaction that we saw on Wall Street yesterday to the prospect of the Fed dialing back on its rate hike expectations, we could see a positive report actually being risk negative again. So it's really difficult to ascertain exactly how the market will react to that. But obviously that's this afternoon at 1:30. We've also got Michigan sentiment at 3 o'clock, and 97 expected there. So a slight slip back on the Michigan sentiment. So moving to my chart of the day, which is the Euro Canadian actually. We've had a massive turnaround. Yesterday we saw the Bank of Canada holding off on rate hikes, or holding off on a further rate hike, and sort of possible hint of maybe sort of less rate hikes further down the line, and that has impacted negatively on the Canadian dollar, and we saw a sharp move to the upside, and that's now broken this key downtrend. We spoke about this key downtrend last week, and ultimately we've actually built a new recovery uptrend, and subsequently breaking through that 51.35 level. That now is a key breakout, 2 months high, and reflects a turnaround and an improvement in momentum indicators. We've seen RSI above 60, MACD lines and stochastics accelerating higher. It pretty much does actually suggest any sort of unwinding move back to 51.35 is a basis of support and a chance to buy. So we've got the initial support coming in around 52 figure today, little bit of a near-term pivot, but then 51.35 being that breakout level. Yesterday's reaction high, 53, just above 53 figure. Interestingly, again, similar sort of reaction high that we saw late September, and then you're looking at 53.70 as your resistance levels. But certainly the market looks as like it's going to be sort of turning into a more of a positive configuration now, and it'll be interesting to see how the market reacts to a corrective move back to that neckline breakout. You've got this clutch of support now from being old resistance levels are now supported, the downtrend, the breakout, and the 144-day moving average. So with that in mind, I wish you good luck in your trading today, and I'll speak to you later.